Hi, this is Scott Voak with Pacific Sotheby's International Realty, and today I want to talk about things you as a seller can do in a very strong market to protect yourself from having problems in escrow. Welcome back. I'm Scott Voak, and this is part 2 of my series for sellers on how you can protect yourself and make sure you have a smooth transaction, especially in a hot real estate market like today. Today I want to focus on vetting the buyer's agent and the lender. Now, getting a real estate license is very simple. Doing real estate successfully is not very simple. What we're seeing right now is a lot of part-time agents. I had a full-time job at Qualcomm. I got a full-time job here, and I'm helping a friend buy a house. Okay, if you're a seller and you have 8 to 9 offers, the thing you need to realize is the buyer's agent is actually more important than the buyer in the success of your transaction. 90% of the problems I've seen with personalities in a real estate transaction are when agents butt heads together. Agents can sometimes tend to have egos, and you want to vet that agent. So you're looking for a couple things, and your listing agent can do all this for you using the MLS. First of all, how many transactions has the buyer's agent done? If the buyer's agent does 1 transaction a year, and is their own broker, that should send up red flags. Because what you have there is you have an agent who is not supervised by anybody. He took the broker's test, which is great, but it doesn't mean he's got experience. Doesn't have any supervision, and may not have done a lot of recent transactions, so might not be as up on current trends, current laws, etc. You'd rather have somebody who's in the market doing 6, 10, 12 buyer transactions a year. Second thing you want to check, your agent should know the buyer's agent just because we've all been in the industry for a while. If not, have your agent look up every single transaction that buyer's agent has done to find an agent on the other side that you guys know. Okay, so if I get offers and I don't know the agent, I'll look at all their production over the last 5 years, find an agent they've worked with who I know, and I'll call that agent. I'll say, hey, I've got an offer from so-and-so. You did a transaction on this property, this date. How were they to work with? What I don't want to see is I don't want to hear that this person came in with a 3-page request for repairs at the last minute. I don't want to hear that they were combative, that there were problems. I want to hear that their client was educated, understood when they were supposed to remove contingencies. Very important that the agent's on top of things. You don't want to be working with a buyer's agent who can't show up to the inspection because they have a full-time job and they can't get the time off. And then you've got an inspector running around the house with a buyer with no supervision because your agent is trying to give them space. You want somebody who's full-time working on it, and let your agent vet that. The second person to vet is the lender. Now, a lot of people think lenders are a dime a dozen. I disagree. Sometimes the big banks decide they want mortgages and they drop rates to really low levels to try and get them. And sometimes they just don't want them for some reason and their rates are higher. What I've found with the big banks is they can be incredible for refinancing. They can be a little bit of a trouble for a purchase because a lender with a big bank only works with that bank. So they know he can't go anywhere else with a loan. So the service level they get is not as high. So if you're working with one of the big banks, I'm not going to call anybody out by name here, make sure the specific lender you're working with is a top producer. Because if they're a top producer, they can get management's attention. If you have a problem with the appraisal, you have a problem with any number of things, insurance, whatever, you don't want, the rookie guy working for a big bank who's not getting anybody's ear. If the buyer's working a broker that is good and your listing agent can vet him and knows him, that's kind of the best case. Or your listing agent probably has a broker that he knows. You just want to make sure that the pre-approval, pre-qualification, whatever they have is legitimate. And your agent can help you with that. Once again, I found that while it's nice to know who the buyer is, and they write those nice buyer letters that you got the picture of mom and dad and the kids and the dogs and the cats and they're going to live in your family and it's awesome, not as important as who is representing them on the other side. Make sure they've got solid representation who can guide them through this process, because there's going to be buyer's remorse. There's going to be problems in a transaction, and you want to make sure that they're guided by somebody with experience and not somebody who has to take time off to answer a phone call. I'm Scott Voak with Pacific Sotheby's International Realty. Thank you for watching my video. Next time, we're going to talk about the contingency period and how you can manage that to minimize your risk and make sure the buyer's accepting an appropriate amount of risk. Until then, make it a great week. And if you know anybody who wants to buy or sell real estate or has an investment question, please have them give me a call. Thanks a lot and see you later. Welcome back. I'm Scott Voak, and I'm here with Ken Reed, Sales Manager for Finance of America, and he's graciously agreed to come on and give us some tips on mortgages. Ken, how you doing?
I'm great, Scott. Thank you so much. I'm happy to be here.
Well, I'm glad you're on board. Here we go. Let's start, because this is going to be the first of several videos I hope we do. Let's start with the basics. First-time home buyers, what are, say, 3 most important things that you're looking for from a new buyer when they're going to buy a house and looking for a loan?
The 3 most important things that lenders are going to look at are credit,
Okay.
income, and assets.
And assets. Okay.